Buying a home is generally the single largest purchase most Americans will ever make, and we believe it is important to understand the terms and process by which you will make that purchase, because the more you know, the better you do. Whether you've already decided on which loan product is right for you, or you are just beginning to think about buying a home, it is always best to know what to expect. The process for obtaining a mortgage can vary from one lender to another, as well as from loan product to loan product. We will walk through the general process that you can expect to go through while obtaining financing for your home through a mortgage broker. Mortgage lending in today's market requires a substantial amount of paperwork. The sooner you submit the required documents and information, the faster the process will go. Lenders have what is called turn times. This is the amount of time they have to review the documents submitted. This can vary from a few days to a week depending on the lender and what documents are being submitted. To start off, you'll be asked to fill out a standard loan application referred to as the 1003. For most loan products, regardless of the lender, you will also need to provide your last 2 months' bank statements, your last 2 years' taxes, your last 2 years' W-2s or 1099s, a copy of your driver's license and social security card, and a signed borrower's authorization form so that your credit can be pulled. Once you have submitted all your initial information and documents, a loan officer will analyze your financial information and credit history to determine which lender will give you the best interest rate and lender credits for your loan. Your loan is then packaged and submitted to the lender. Once the lender has reviewed your file, they will either approve or deny your loan application. When you are approved for a loan and get into contract, the lender will issue what is known as prior to docs conditions. This is a list of additional documentation or clarifications on previously submitted documents that the lender is requiring before they will issue your loan documents, which is what you sign at closing. In essence, you are conditionally approved until you are cleared to close. This is the part of the process that generally takes the longest and requires the most work. Depending on your financial history and loan type, the list of conditions can vary in size a great deal. FHA and VA loans usually require the most documentation of any loan type. The process may seem long and tedious, but the benefits are many. Examples of things that might be on a conditions list include verification of employment, verification of rent if you rent your current residence, documentation of student loan payments or deferment status, and letters of explanation, which is a letter drafted by the borrower to explain a question the underwriter has. Some examples of these would be large deposits into your bank account, inconsistent addresses on documents provided for the loan, gaps in employment, and increased or decreased income. Once the conditions list is received from the lender, it is reviewed and all necessary documents are requested from the borrower. The sooner you submit these documents, the faster the process will go. The loan officer then compiles all the requested information and submits it back to the lender for review. This is where a lender's turn times come into play. For each new condition submitted, the review time starts over, so it is best to submit the full list of conditions completed at one time. Now it's time to order the appraisal. This is one of the most important stages for any loan. The appraised value of the property dictates how much the lender is willing to loan you. A lender will never lend more than a property is worth and will not lend over the specified loan-to-value limits for any given loan product. For example, a loan product that specifies up to 70% loan-to-value means that the lender will only lend up to 70% of the appraised value. It is always the hope that the appraisal will come in at or above the purchase price, because if it doesn't, you'll need to either renegotiate the contract with the seller or come in with the difference if you want to purchase the home. Once the lender has your appraisal, your file will be sent for final review by the underwriter. If everything looks the way it should, the underwriter will give the file final approval and what's known as clear to close, and your loan documents will be issued to title. Your loan officer will let you know the exact amount you will need to bring for your down payment and any closing costs and schedule you a time to sign. After the loan documents are signed by the buyer and seller, they are sent back to the lender and they begin to go through the conditions to fund. This is similar to the list of conditions that we discussed earlier. However, these conditions are primarily for the escrow officer, loan officer, and lender, and don't usually require any information or documentation from the buyer. In some types of loans, the lender will require documentation of where your down payment came from, such as the case with FHA loans. Once the conditions to fund are met, the lender wires the money to title and all necessary documents are sent to the county recorder's office to be filed. You are the official legal owner of your new home when your grant deed is recorded with the county. This was just a brief overview of what the process for obtaining a home loan will be like. It can vary greatly depending on your own personal situation, the type of loan obtained, and the type of property purchased. We know that it can all seem a little overwhelming at first, but don't worry. The IPA Home Selling Team is committed to educating consumers on the home buying process, and we are always here to answer any questions you may have and to help make the process as comprehensible and stress-free as possible.